and we will get going right away. All right. But I do see a lot of people already joining in, so I just want to start by asking you all, how are you guys feeling right now, right? The crypto market is going insane, right? We can see prices skyrocketing. I'm on TradingView constantly. Uh, Right now, Bitcoin is just below the 119K mark. But what is more interesting is what's happening in altcoins. All right. If you're following what's happening with the major alts, like around 10% up. So we're seeing a huge rotation taking place right now. Uh, the money from Bitcoin to alts, this is exactly what I was speaking about in the last few webinars as well. It's taking shape now. Okay. So guys, I want to know from you, how are you all feeling? Are you guys bullish? Are you guys, still on the fence? You're still not entered the market? Just drop your comments in the chat box, or you could also use the Q&A box for any sort of comments that you'd like. All right. So I want to see just how many of you are bullish right now. All right. And where do you think Bitcoin is going to end this week? Do you think we're going to go back to 123K, or do you think we're going to stay around this mark? Okay. So let me hear your thoughts. What do you guys think? Okay, so I'm seeing bullish. Yeah. I'm seeing a lot of bullish. I'm seeing 100 and okay, 130K. That's pretty very optimistic. Uh, bullish. Fantastic, great. So, uh, yeah, I mean, I think we're all on the same camp and we're all bullish. 110K. I see 110K from Satya. Bullish. Okay, great. So, without any further ado, let's just get started with today's session. And I can see more people joining in. Welcome, everybody. Yeah, so, folks, welcome back to another episode of the Crypto Brief. It's our fifth episode. I'm always thrilled to have you all here, um, and interact with our community. If you've been tuning in each week, big shout out to you for sticking with us and staying on top of how fast this market is moving right now. And if this is your first time joining this stream, a huge welcome to you all. Really glad to have you all here. Okay. So for all those who are new here, let me just quickly explain how these weekly crypto briefs uh, pan out. Uh, and why we also do these sessions. See, now at Mudrex, we pretty much live and breathe the crypto markets, right? We're constantly analyzing the charts, tracking news headlines, watching what's happening on chain, and ultimately hunting for the best trend or the big narrative in this ecosystem, right? Um, and to be honest, yeah, in crypto, things move incredibly fast. That's what we're seeing today. That's what we've seen last week, right? One day the market is hitting new highs. The next day there might be a major sell-off, and suddenly an entirely new sector will begin a uptrend, right? So it can definitely get pretty insane. Okay. So we thought, why not make it easier for you all as traders and investors to actually keep up, right? That's what this weekly crypto brief is all about. Okay, so once a week, we sit down together and I walk you through the biggest stories, the market trends, the price moves that's basically shaping the entire crypto market, right? And of course, the goal, as always, is to help you cut through all of the hype that's happening right now. And hopefully, you get a clearer sense for where things might be headed next. All right, cool. So, with that the way, let's actually go ahead and talk about what we're going to be covering in today's session. Um, So for today's brief, we got some news that's incredibly bullish, not just from a charting perspective, but also adoption wise. Since, starting these streams around 4 weeks ago, things actually seem to be aligning. And my belief and my conviction is that this bull run has so much more room to go. Okay. And I'm not just saying that, I truly believe it because everything that we've spoken about in the past streams have actually aligned. For instance, in the past webinar, I mentioned that Bitcoin would likely reach a new high, but we might see a pullback in Bitcoin and a rotation might start into utility altcoins. So Ethereum, Solana, Cardano. That's exactly what's happened yesterday and today. All right. Slowly we're seeing these patterns play out. And I I can say with confidence that I think I know where this market is headed, at least in the short term. All right. So yeah, to begin, I will discuss the total crypto market cap and where we are right now. I'll then proceed to talk about Bitcoin dominance and what that's telling us about an altcoin rally. Uh, we'll talk about why that's happening in the first place, and then I'll share some on-chain indicators that actually gives us clues about whether Bitcoin's run is cooling off or just taking a breather. All right, that's specific to Bitcoin. Okay. Apart from this, I will also talk about a very, very important indicator that every altcoin holder in today's stream has to pay attention to. Okay. Apart from this, there's also some bullish institutional news, with Standard Chartered actually stepping in deeper into the crypto space. Plus, we'll also look at some fresh inflows into the new, um, you know, into the Ethereum ETFs over the past week, which is absolutely encouraging for Ethereum holders right now. Okay. Then I will go on to the macro side. We'll talk about the latest US CPI data, what that means for interest rates, and why a July rate cut is looking less likely, but also why there's still a very good chance we see two rate cuts before year end, and why this is so huge for crypto. Okay. And as always, we will wrap up with my sector spotlight for the week. So stick around for this section because I will be giving you all a breakdown of some coins I've kept on my watch list for this upcoming week. Okay. So yeah, guys, settle in. There's a lot to cover, but I do think that this is going to be a huge stream for everybody. This week, I do think things are just starting. We've, you're probably opening the Mudrex app right now and seeing around double-digit gains for your favorite coins, right? I would say start getting used to that. That's how the crypto bull run is, all right? But I'll give you a balanced perspective as well. Euphoria, this feeling of, you've done it, will settle, and I will tell you exactly how that's not a good thing. You shouldn't get driven by the euphoric rally, all right? I'll give you a strategic positioning towards the end as well. Okay, cool. So let's go ahead with the slides. All right, just a quick intro before I begin. Um, so for anyone who's new to these sessions, my name is Anush and I'm part of the research team here at Mudrex. Uh, I've been in the crypto space for roughly 6 years now. And yeah, just let me tell you that I've seen some massive, massive changes over this time. Okay. First off, the number of resources and tools available today is incredible compared to when I started. Back then, we didn't have such live streams, at least the frequency of it wasn't like this. Um, but I really want to stress this. The amount of information that's available right now, it's can be a sort of double-edged sword, all right? Because while it's amazing that there's so much information out there, not all is good or sometimes even accurate. Okay, so there's a ton of misinformation floating around, and it's super important to be able to actually separate the real insights from the fake ones. Okay. On top of that, of course, the crypto markets themselves have grown so much and matured so much over these years. Crypto is a completely different asset class today. There are millions of new coins and projects. And honestly, I totally get it. It can feel pretty overwhelming trying to keep track of all of the coins. But that's exactly where I come in. Yeah. My job is to dig into these fundamentals and cut through all of the noise and, help you build a well diversified portfolio that has the potential to make some decent returns. Yeah. So that's where I come in. And yeah, so that's what I'm working towards every day. That's the goal of these weekly sessions to help make the crypto world a little bit less intimidating and hopefully a lot less overwhelming as well. Okay, cool. Let's now get into today's session. Yeah, as always, guys, no, this is not financial advice. All of the coins that I'm going to be speaking about towards the end of the session and during the Q&A, do not treat this as financial advice, just educational purposes. Always do your own research. All right. Cool. Okay. So let's start this session off with the week's biggest headline, in my opinion, and it has to go to the total crypto market cap smashing into new all-time highs. All right. Um, they reached roughly 3.8 trillion. And this is something that we just haven't seen since the end of 2021. So the end of the last bull run. Um, this kind of milestone is massive, okay? Not just from a numbers perspective, but because of what it actually tells us about where the market is, how it's evolving, and why investors are so focused right now, okay? Now, why does this matter? I'm just going to break this down for you, all right? Think about this. The last time we saw crypto market cap at these levels was during the huge bull run of 2021. Back then, retail, so basically investors like you and I, um, we are we were there in the millions. Everybody was in crypto, right? Somebody had exposure to crypto, right? There was a huge meme coin momentum. What's different today is that this high does not feel hype driven, all right? It's backed by real money, institutional money, and regulated channels like ETFs. So this altogether feels a lot more mature, all right? Now, at 3.8 trillion, that's not a small number. Okay, the entire crypto space is almost the size of the United Kingdom's entire GDP, right? And it's bigger than the market caps of so many global giants like Microsoft, Amazon, Nvidia. Uh, so, that's no longer a sort of curiosity, right? It's a real financial sector in its own right. Now, there are things like spot Bitcoin and Ethereum ETFs, which are huge right now. So if you see in 2025 alone, Bitcoin ETFs have drawn in over around 50 billion in inflows, with just under 15 billion pouring in over the last few months, right? That tells us just how much demand there is in the system, right? And it definitely tells us if it's real, growing, and if it's sustainable, right? Now, we're not just hitting these milestones, we're on the uptrend for solid reasons. There is this ETF demand, okay, that I just mentioned. There's so much macro bullish news as well. Okay, we have a pro crypto president in the US, the largest economy. Uh, they have their own strategic Bitcoin reserve. This is something we simply couldn't even dream of a few years ago. Okay, and of course, it's not just retail anymore. We've seen public companies, treasury managers, they're increasingly allocating to crypto. So combined with the ETFs and this, what are we seeing? We are seeing a huge structural demand taking place in traditional finance. And the most interesting part is retail is not even back yet. That is what drove crypto last bull run. So you can just imagine how much higher we can go when there is demand coming from institutions and these traditional players. But when the retail come back as well, that's when we are going to see a huge rally, massive rally, right? So just to tell you again what I think is happening right now, in 2021, crypto highs were driven by meme coins, by a lot of hype, a lot of TikTok hype, a lot of retail FOMO. Uh, Now, don't get me wrong, there's still volatility and excitement, but we've got some serious players now in the market. Okay. Now, also, something that I want you all to note is that when the total market cap breaks a record like this, okay, right now we are still on that support. We're treating it as support right now. If we have a clear breakout from here, historically, money starts rotating into altcoins. Okay. And I think right now, today is proving to be one of those days where we are seeing the first signs of this rotation taking place. Uh, the most important point that we'll have to see is how this chart that you see right now, how it closes on the week. If it closes above that purple line, I think it's fair to say that we will start seeing more money rotating into your favorite altcoins. Okay. Apart from this, of course, this is a psychological tipping point. Reclaiming these highs is a major, major confidence booster for the entire market. Okay, it helps shift the sentiment from just Bitcoin, just Bitcoin dominated, to crypto. Like the entire market is breaking out. So that structural sentiment builds itself out. More apps, more regulation, more ecosystems. Okay. Okay. So why does this matter practically, right? What you should be asking, why should I care also? Uh, Momentum matters. When there is a market-wide all-time high, this tends to attract more attention than just Bitcoin breaking all-time highs. People are going to think, we're back. Retail pops in, then the FOMO grows. But this time it's accompanied by the entire institutional footing that I mentioned as well. Okay. Now, for all of you over here in this stream, you guys are super, super early. Okay. I cannot underestimate that. Okay. I need to tell you all this. And I want you all to know that as altcoins begin to follow Bitcoin's momentum, breakouts start happening. It's already started, but this is just, it's the beginning. That's when you can start hunting projects with solid, solid fundamentals. Okay. Cool. All right, so now I just want to tell you some of the key levels to watch here. For the crypto total market cap, holding above around 3.8 trillion keeps the bullish case alive. Okay. Now, Bitcoin dominance, I'll come to this as well. But if it drops further while total market cap rises, it signals altcoin season is here. Okay. Next, you need to track the ETF inflows. Further money that's moving into spot ETFs, especially for Ethereum, could chart the next leg of momentum, right? Cool. Let's go ahead. And guys, I see that some of you have raised your hands. Just remember that I will have an entire Q&A session towards the end of the webinar. I will have plenty of time to answer all of your questions. So keep them ready and stick around for that because I will be going through your favorite coins as well. And if you have any questions regarding our platform, I'll definitely go through that as well. Okay. Okay. So let's talk about dominance now. Um, so this is a chart that really caught my eye this past week. Um, it's a huge bullish signal that could actually start the next altcoin wave, and why it's something we should all be tracking very, very closely. For all of us altcoin holders right now, I want to know from the audience, right? How many of you are holding altcoins right now? Let me just get a sense of whether most of the audience is primarily in Bitcoin, or do you have exposure to altcoins as well? Let's see. Put your thoughts in. Okay, I'm in altcoins only. Okay, both holding 50% in alts. Only altcoins. Okay, so looks like everybody holds some exposure of alts. Okay, so this chart that I'm going to be showing you and talking about is extremely important. I think this is the most important chart for any altcoin holder. Okay, the chart that you're seeing um, on the top left, okay, is the Bitcoin dominance chart. Basically, it just measures the market share of Bitcoin relative to other alts. Okay, all of the other alts. Now, right now, the Bitcoin dominance chart is flashing a very, very interesting signal. So, as of early this week, BTC dominance fell from around 66% to now, if you see, I'm going to just go into TradingView to see exactly now, because I think it's fallen even more. So let me see dominance. If I check dominance right now, yeah, it's at 62.44. So it's down from 66 to 62.44 in just a few days. Okay. Um, Now, if dominance breaks below the key threshold of 60%, that historically has kicked off a full-blown altcoin season. The 60% mark usually has an accelerated drop of BTC dominance. So this is the key level that I want you all to pay attention to. Now, for those of you who don't know what dominance is, I'll just explain it to you very, very simply. Okay. It is when, so basically when BTC dominance falls like it is right now, it's a sign of altcoin season in progress. Usually when this chart falls, it means money is flowing into altcoins. That's exactly what we're seeing right now. There's early signs that investors are leaning into these higher risk, higher reward plays, right? Now, this pattern echoes what happened in mid 2021. I saw this happening in 2021 as well. Dominance peaked, then dropped all of a sudden as altcoins exploded, right? We're seeing a very, very similar technical setup now. I remember when dominance fell and Solana was around $32. And within the span of 2 to 3 weeks, it went up to $250. Okay. So that's how fast things can move when dominance falls. Okay, so that's also the reason why I want you all to pay attention to the 60% mark. Okay, 60% mark is so, so crucial. All right, cool. The other chart that you're seeing here below the dominance chart is called the altcoin season index. And you can find this on a website called CoinMarketCap. Okay. So anything that reads about 26 to 39 suggests that it's still tilted towards Bitcoin for now. It's basically still Bitcoin season for now. But with this dominance weakening, that index could climb extremely quickly to the altcoin territory, which is usually 75 and higher in the coming weeks. I'm not talking about months. This can literally happen in a week. Okay. Maybe if we check back in next week for this same session, this could be closer to that territory. That's how fast these things move. All right. Okay. Now, the most critical indicator we should actively monitor in the coming days, like I mentioned, 60% or lower, that would be a green light that altcoins are the next runway. Okay. But if it bounces back above 64% or 65%, it may delay the rotation. That's just a reality that we have to face. Okay. Um, Now, a rise past 50 in the altcoin season index, the other chart, will signal that an alt season is underway. All right. So that is something to follow as well. Next thing to follow is the ETH ETFs. Look at the ETH ETFs. All right. If we see inflows above 800 million, I do think it's alt season because we're seeing huge money moving into Ethereum, which is an altcoin, right? Now, when people max out Ethereum, where are they going to look next? They're not going to go to Bitcoin. They go to Solana or they'll go to BNB. And then the money will flow to smaller caps. That's exactly how it works. This time is no different. When people say that markets are different this time around, apart from the institutional money, of course, it's cyclical, right? This is how crypto works. And I do think this is how it's going to play out this time around as well. Okay, cool. Let's move on. Okay, so now, we've talked about the bullish scenario. We've talked about how bullish Bitcoin has been. Uh, but let's also talk about something really important as we sit here in the middle of this massive bull run. Okay. I think it would be unjust of me to not give you some sort of risk indicators as well. So I want you all to understand this very, very clearly. All right. See, the thing is, Bitcoin has smashed through these new all-time highs. It has hit 123K, incredible milestone, which was reached last week. But exciting as it is to see these new highs, I want to shine some light on these risk indicators that we should all be paying attention to. Okay. During this bull run, I would say till around October, November, we will see these green days. We will see double-digit green days, but we will see some massive red days as well. Okay. And you need to start expecting those sort of volatility, right? One of the most useful tools I look at for gauging where we are in the market and where we might see a sort of pullback for BTC specifically is called the short-term holder cost basis model. And I want to explain what this is, how it works, and why it matters. Okay, so much right now. This is the chart that you're basically seeing in the slide. And I'm going to explain exactly what this is, right? Okay. So first off, what does this whole fancy term mean? All right. When we talk about short-term holders, we're talking about people who bought their Bitcoin fairly recently, usually within the past few months. Think of traders, newer investors, or anyone who's actually actively moving coins around rather than just holding their coins. Okay. Now, the cost basis simply means the average price these people paid for their Bitcoin. So if a bunch of short-term holders bought their Bitcoin at say 90K on average, that 90,000 becomes the short-term holder cost basis. Understood? Um, you can think of it like this. It's kind of like knowing the average purchase price of everyone who's recently jumped into the market. And that's really, really powerful because it actually helps us understand where their profit or losses stand right now. All right. Now, here's why this matters so much. When Bitcoin, when Bitcoin's price goes above the short-term holder cost basis, it basically means that most of these recent buyers are now sitting in profit. Okay, so that's great news for them, but there is a huge flip side to this. Okay, because the higher the price goes above what they have paid, obviously, the more tempting it becomes for these investors to start cashing out and locking in those profits. All right. And when a lot of people start selling to take profits, that obviously creates selling pressure in the market and sometimes will lead to a pullback. Okay. So it's super, super important to understand this market risk, especially during big bull runs like the one we are in right now. Right. Now, let me talk about standard deviation. I'll just break it down very, very simply. Now, we don't just look at cost basis itself. Usually, on-chain analysts also track how far above or below the current price is compared to that cost basis. And they measure that distance using something called this standard deviations. Okay. Think of it like bands, the bands that you see right now around the average price. It's basically a way to show when the price has moved so far away from the average that it might be getting a bit sort of overheated. All right. So here's how those bands work, right? Right around the cost basis, markets are pretty neutral, not too hot, not too cold. Above one standard deviation, the markets get heated. People have decent profits and some start taking money off the table. About two standard deviations above. Now that is the overheated zone. Historically, when Bitcoin pushes into that level, it's a strong signal that the market might be topping out. Okay, because short-term holders, of course, have made huge gains and are very, very likely to sell. All right. Um, so now let me bring it back to what's happening right now. When Bitcoin hit 123K, we actually pushed right about one standard deviation above the short-term holder cost basis. So that's why you saw a decent pullback in Bitcoin. As soon as it hit 123K, it hit that yellow band. And this is a clear indication of why we saw that. Okay. And this is something that I was tracking actively as well over the weekend. For, if there was by chance that Bitcoin did go above the 123K range, this was the first chart that I went to go and analyze. All right. So yeah, right now we are officially in the heated zone. That means that on average, those who bought Bitcoin recently are sitting in pretty nice profits. And while that's awesome for them, it also means we could start seeing some people being tempted to lock in some gains, which does create selling pressure. Now, this is the critical part that I want everybody to understand. All right. If this momentum continues, the next level to watch is around 136,000. Yeah, $136,000. That's roughly two standard deviations above the cost basis, the red band that you see in the chart, right? Historically, this red zone has been the danger zone for Bitcoin. It's often where we've seen a sort of local top from previous bull runs. Basically, it's when too many people are in profit and the urge to sell becomes overwhelming, leading to corrections. All right. Now, of course, the question is, does this mean the bull run is over? And no, absolutely not. I'll show you another indicator after this that actually backs why I'm saying that, right? Um, yeah, the thing is, you need to understand this, right? Bitcoin can absolutely keep climbing, even stay in the heated or overheated zone for a while. But it's just important to know that the higher we go above this cost basis, the more careful we need to be. All right. Uh, because the market, of course, increasingly it becomes more fragile and yeah, just need to be able to view this from a practical lens, right? So here's the bottom line here. The move to 123K has pushed Bitcoin into a zone where usually short-term holders are sitting on healthy profits. That's a good sign of market strength, but also potential risk because it makes profit taking more likely. Uh, if we push towards 136K, we are entering the overheated zone right now. I'm saying if by this week, if Bitcoin were to hit 136K, we are in the overheated zone. All right. And I would start taking or booking like a little bit of profits here and there. Right. It doesn't mean we're guaranteed to crash. This is an important point, but it does mean we need to stay alert and manage risk. Okay. So, as we celebrate these new highs, and of course, we have to celebrate these new highs, but just keep this indicator on your radar, right? Uh, if you need access to this indicator, usually there's a lot of people on Twitter talking about this. Just search the term short-term holder cost basis, and many people, many analysts are talking about this right now. All right. Okay. Cool, guys. So let's keep going. Yeah. Okay, so before I go into some of the news of the week, I really want to stick with this question that's on so many people's minds right now. I'm seeing it flood across crypto Twitter. The question is basically, is Bitcoin already at its bull market top, or do we still have some more room to run? Okay. And to answer that, I want to talk about one of my favorite tools, and honestly, one of the most reliable signals we've seen over multiple years. It's called the Pi cycle top indicator. All right. Uh, Again, like I did with the other model, I'm just going to break this down very simply, and I'll tell you how it works. Right. Uh, Basically, this indicator uses two key moving averages, okay, which remember are just averages of Bitcoin's price over a certain number of days. And it looks for a very specific crossover between them. Okay, the first line it uses um, is the 111-day moving average. That's basically the average price of Bitcoin over about the last 3 to 4 months. Okay, it's a sort of shorter term view of the trend, right? The second line is the 350-day moving average doubled, meaning we take the average price over almost a year and then multiply that number by two. That's why it's doubled, yeah. So why double it? The idea is that it sets a kind of extreme threshold. In previous cycles, Bitcoin's price has only reached levels that high when the market was completely euphoric, like, classic blow off tops. Um, Now the signal, the pi cycle is looking for when the shorter term moving average shoots up and crosses above the longer term average. Historically, and this is as simple as it gets, when that crossover has happened, it's been an incredibly accurate sign that Bitcoin was either at its bull market peak or just a few days away from it. Okay, incredibly accurate. You can see it. You can see it in the chart, right? It almost nearly to the day, it predicted the top for 2014, 2018, and 2021, albeit it didn't get the 69K. Close enough, right? It was around 65K when it predicted that Bitcoin was getting overheated, right? So don't leave it to chance. Use tools like this that actually have very good, very, very good reliability and credibility in the space as well. So yeah, um, like I said, you can just see how well it's worked, right? So where are we right now in terms of this chart? Now, the chart that I've shared on the screen shows Bitcoin's price along with these two pi cycle lines. You'll see the orange line is the 111-day moving average and the green one is the other longer term. Historically, each time that orange line crosses above the green, like I said, major top for Bitcoin. Now, if you look at the way the right, on the right side of this chart, you'll notice that the two lines haven't even crossed yet. It's not even close. They are, of course, they're converging because Bitcoin's price has been surging, and that's pulling the shorter term average upwards. But as of now, there's still a huge gap between them. Basically, what it's saying is we're not quite there yet. Okay. Historically, the final cross happens during the most extreme phases of the bull run when prices shoot up like parabolic. The fact that the two lines haven't met yet, to me, says that we still have a lot more upside. So, how high could Bitcoin go based on this price signal? Yeah. That's the $1 million question, right? So now based on the slope of the lines and what many analysts believe is that if Bitcoin keeps climbing at this pace, this cycle top could happen sometime in late 2025, firstly, in terms of timeline, and the potential range being 130K to 170K. That's what most analysts are saying across crypto Twitter, across many, many media channels. This is the target that they're saying, right? Now, when the pi cycle top does finally signal that it's happening, it doesn't necessarily mean the price will crash the next day. Historically, Bitcoin has often pushed a little bit higher even after that signal, but usually a very good sign that we're entering that final phase, right? And most likely, everybody tuning in today and who has exposure to Bitcoin, you all will be in profits anyway. All right. So it's probably a good idea when you see the signal flash to pull some profits. I'll be very, very honest with you. All right. Okay. Okay. Let's keep going. And let's go over to the news. Okay. Let's go over to some huge news that came out last week. Uh, Standard Chartered, the huge bank, right, has officially launched institutional spot trading for Bitcoin and Ethereum. So that makes them the first global system, just think about it. Such a huge bank to offer deliverable regulated crypto trading directly to large institutional clients. This includes like corporates, asset managers, investors. It's a huge moment for crypto, all right? Um, See, firstly, this is a first ever bank model for crypto. It's not a fund. So Standard Chartered isn't offering another sort of ETF or a wrap. It's providing real deliverable trading. So institutions can actually buy Bitcoin and Ethereum outright, settle the trades in real crypto, and manage custody through their own uh, choice of provider, or including they could also go for Standard Chartered's custody setup as well. So this gives these institutions and investors far more control compared to packaged crypto products, right? Next, they are integrating with existing FX platforms. What does that mean, right? Basically, the crypto trading is built right into the bank's foreign exchange trading desks, meaning clients can trade digital assets using the same interfaces, workflows they already use for currencies. So there's no barrier there. There's no barrier to enter anything. There's no learning curve, right? So that lowers adoption frictions massively, right? Then the next, of course, it's fully regulated. Yeah. Standard Chartered is regulated by the UK's FCA and it's operating within the most harshest standards required of a global bank. All right. So that includes full risk management controls, balance sheet safeguards, compliance oversights. So this removes a huge pain point for a lot of institutional investors. Okay. Um, Now this is huge for crypto, right? This is a institutional green light. This sends a message that a major global bank believes crypto is here to stay, and it's providing regulated access accordingly as well. So that's a powerful signal for other banks, other big asset managers who might have been, waiting on the sidelines, right? And of course, and finally, it's bridging traditional finance and crypto. This is something that we've wanted for years. Yeah, we wanted traditional finance to embrace crypto, right? Now, institutional clients are peeping into crypto. They have the avenue to do it. And that too, they have the avenue to do this within their existing banking relationships as well. So they don't have that learning curve, but they have the opportunity to hold this asset. Right? Just imagine the amount of money that can come into crypto this way, right? So this is just something that I want you all to watch. We're seeing traditional finance and crypto merge very, very quickly. Over the past few weeks as well, I've mentioned this. Every week now, we seem to be hearing a new bank that is adopting crypto or providing crypto access to their clients. So all of this just adds another layer of adoption, right? Cool. Okay, now let's turn our attention to Ethereum. It's having an absolutely monster week on the inflow front, not just prices. In fact, let's just go and see how Ethereum's prices are doing right now. Almost 3.5K. Unbelievable run, right? Um, I want to know who all are holding ETH here. You guys must be very, very happy today. Uh, yeah, let's see. Put it in the chat. Let's see how many of you guys are actually holding Ethereum. Uh, okay. Okay, perfect. Perfect. From 500. Okay, holding ETH from 500. Amazing, Vikash. So you, well, continue holding. I think Ethereum's run has just started. Solana, okay, so awesome. Um, oh, guys, I can see a few comments here about my screen not being visible. I hope you can see this screen now because I really want to go through the ETF inflows. Just drop a yes in the chat if you can see. Or, raise your hand if you can see the screen as well. Okay. All right. Cool, cool, cool. Cool. Awesome. Okay. Okay. So I see that there are a lot of Ethereum holders. I'm an Ethereum holder myself, and it's a great time to be holding ETH. Let me just tell you that. All right. I mean, let me go through this reason for why it's an amazing time to be holding ETH. Okay. So spot ETH ETFs have now seen 9 days consecutive streak of net inflows, bringing in a total of around 2.9 billion into these funds. Okay. Uh, Now that is That's institutional demand right there. Okay. That's the longest uninterrupted stretch we've seen for Ethereum ETFs since the day they launched. And the last 9 days, as you can see, they weren't small. They've actually pulled in huge chunks of capital coming in. And yesterday, in fact, was the largest inflow till date. All right. So what is this? What is this saying, right? They're saying that institutional investors are not just testing the water. They're just not testing it. They're diving in head on confidently into Ethereum, right? So this is bullish for several reasons. Institutional conviction. There's it's not just retail now on Ethereum. It's on it's everywhere right now, right? Bitcoin, of course, was the first mover, but Ethereum is quickly catching up. Yeah. Secondly, it's absorbing the supply. When ETFs buy tons of Ethereum, that reduces open market supply. All right. So that's another huge reason. Now, this is a huge signal for a broader rally for Ethereum. Already, ETH is trading very close to 3.5K, but these ETF inflows are sending a signal across the market. ETH demand is growing institutionally. And what does this often tell us? Tells us that there is a sentiment shift that's happening right now and that money is flowing into Ethereum. We've already seen ETH breaking these levels before, but with so much momentum, I don't think so. Right? So, yeah, brace yourself, guys. All Ethereum holders. Things might get a little volatile, but in the long run, I do see ETH as a very strong asset to hold, right? Um, okay, so let's go ahead. Okay, let's talk about some macro news now. Um, yeah, so let's talk about some of the news out of the US that came out last week, because this stuff has huge implications for crypto. Um, Now, the US Consumer Price Index, or the CPI, basically came in at 2.7% year over year for June, which was actually higher than market expectations. Okay, basically that's up from May's 2.4, and it has definitely risen. All right. Now markets reacted immediately. We saw a dip in risk assets like Bitcoin and broader crypto sell-off. Uh, Now, what does this mean, right? With inflation sort of, coming up a little, Fed officials are, of course, pushing back against rate cuts this month. Okay. In fact, what you see on the screen, markets are now actually assigning a 97% probability that interest rates will remain the same through July's FOMC meeting. So, if you've been hopeful for a July relief rally, it looks like that's unlikely, at least from this perspective. All right. We are seeing huge rallies off the board, but if there were to be a rate cut in July that could extend the rally even further, that is looking unlikely right now. Okay. But two cuts, I do think is very still likely this year. See, the broader narrative still points to two rate cuts. And this is why, all right. Basically the Fed over there. Yeah. The Fed have projected in June, and they show a consensus for 2 quarter point cuts in um, later 2025. Yeah. Many analysts across the board are also pointing at cuts in September and December. Okay, potentially, I'm not saying that this will happen. Potentially, people are also talking about a 50 basis points drop by December if inflation eases, right? Now, the Fed minutes confirm that while July is unlikely, the window is open for easing later in the year. This is exactly what was said, assuming that inflation continues to gradually cool down. Okay. Now, why is this super relevant for crypto? Okay, this is something that I mentioned in our previous live stream, but I want to go through this all with you again because it's really, really important for you to also understand. Um, Basically, when the Fed cuts rates, borrowing gets cheaper, liquidity rises, and investors start hunting for yield or returns, right? That's where crypto benefits because it's a relatively high risk, high reward asset class. Yeah. And historically, bull markets in crypto have accelerated after rate cuts, right? Next, lower rates often weaken the dollar, yeah, which in turn lifts risk assets like Bitcoin and crypto, right? Then there is positive market sentiment as well. Basically, easing policy tends to shift the sentiment across financial markets from being cautious to being bold. When markets expect rate cuts, appetite usually for risk assets increases through the roof, right? Which typically supports rallies in crypto as well, right? So, what does this mean going forward? July cut, I do not think that's going to happen. September, December cuts, very, very possible. If CPI continues to move closer to the 2% mark, we could see two meaningful rate cuts then. Now, just remember this. This is all happening in the backdrop of crypto taking off. All right. This is actually, it is not the best news. It's not bullish that we're not likely to see a rate cut in July, but the markets have priced that in, right? So what does that tell us? That shows that sentiment is so positive in crypto that we can even look past that. So imagine if we get the rate cut in September and December, what could happen to crypto, right? We will have to have another discussion then because then maybe our valuations of 130K is too low. We're being too bearish, right? Maybe we're being too conservative then. We'll have to reassess. Yeah. So that is just something to leave you all with, to leave that thought in your head that this is another macro factor that we have to look at down the line. But for now, the July rate cuts doesn't seem likely, right? Cool. Okay, folks. Now let's dive into my favorite part of these weekly sessions, the sector spotlight. Last week we spoke about one of the flashier and admittedly more speculative sides of crypto, meme coins, and they've definitely been having their moment even this week. But today I want to shift gears completely and shine a light on a sector that I think is incredibly important. Yet, I do think it's still flying a bit under the radar right now. Uh, and I'm talking about decentralized storage, right? Now, I know that might not sound as thrilling as memes or, gaming tokens, but just hear me out, all right? Because this sector has some of the strongest real world use cases in the entirety of crypto, all right? And more importantly, it's starting to show some big price moves, as you can see on the chart, right? Uh, so let's just start with the basics. What is even decentralized storage? Why would I invest in something like this? Uh, think about it this way, yeah. Think about how the internet works today. All our data, whether it's, documents, photos, the entire websites like Amazon Web Services, Google Cloud, Microsoft Azure. Uh, these are all centralized systems where a single entity controls the infrastructure, the access, and often the rules. Okay. So that model, of course, has worked pretty well for the internet up until now, but it comes with a few big, big problems. All right. Firstly, there is single point of failure. If AWS goes down, huge, huge chunks of the internet go offline. That's it. Next, there is data privacy issues. Centralized providers hold enormous power of user data. They can access, they can sell, or be forced to hand it over. Okay. Then there is censorship. Governments or corporations can actually pressure centralized providers to remove content or restrict access. Yeah. And finally, there's high costs. Yeah, a handful of big tech companies essentially dictate pricing and service conditions, right? So those are the drawbacks, right? Now, decentralized storage flips that entire system on its head. Instead of relying on a few centralized data centers, decentralized storage networks use thousands or even millions of independent nodes around the world. Basically, people and businesses contribute spare hard drive space, and in return, they earn tokens for storing data securely and redundantly. So, what do you get? Greater security, more privacy, lower costs over time, and of course, censorship resistance. All right. So, in short, decentralized storage offers a way for you and I to store and retrieve data that's a lot more private, that's a lot more secure, and a lot more cheaper than relying on these centralized tech giants right now. Okay, as the world goes more digital, as the world generates more data from AI, uh, the demand for this storage is only going to grow. All right. Now, why am I bringing this entire narrative up this week specifically? Because if you look, right, just have a look at the prices and the gains over the past week. These are some of the top decentralized storage coins like Filecoin, Walrus, Arweave. All of these are huge decentralized storage players, right? Um, Now, a lot of the major tokens in this space have been posting double-digit gains over the past week, okay? Which is significant in any market. But what's especially interesting is there's barely anybody talking about this on crypto Twitter, okay? I mean, think about it, right? Last week, everyone was talking about meme coins. The week before that, it was DeFi. Now, virtually nobody is talking about what's happening here, even though the prices are moving. So there's just a subset of people who understand this and they're putting money into this. So imagine when people actually start understanding what's happening here. All right. So that now brings me to a concept I really want all of you to remember. It's called the popcorn effect. Okay. Let me break that down for you. In a crypto bull run, different sectors take turns popping off, just like, popcorns, right? At first, there's going to be silence. Then suddenly, one sector will start running. Prices will shoot up. These narratives will build. Influencers will start tweeting every day about Arweave, about Filecoin, and then the FOMO will kick in. Okay. While that sector is hot, others will stay quiet. Okay. But then as traders take profits, that heat will shift and another sector will pop, then that sector will rally. Okay. We saw it just recently. Meme coins were popping off last week. Now I believe this week that next kernel to pop is storage. All right. And here's the key. If you're building a crypto portfolio, you do not want to chase the last sector that popped. You don't go back to memes. All right. Or don't enter the trades. You can obviously continue holding those memes, but look at the narratives that people are not talking about yet. All right. Um, and especially if you're seeing these double digit gains while they're not talking about it, I think that's a sure shot signal. All right. Uh, yeah. So let's just talk about specifics now. I'm going to tell you about the four projects that I have on my watch list. I'm personally keeping a very, very close eye on these projects. So if you have a pen and paper or if you have some place to type this in, just keep them ready. Yeah. First one, Filecoin. It is the blue chip in the decentralized storage narrative, and it's been there for several, like since the last cycle as well. So it has been through a bear market. So you can see the resilience there for Filecoin. Similarly, and likewise, it's Arweave. The ticker is AR. They have a huge community as well. Third, I would say is Walrus. It's built on the Sui network. They have a very, very good community, amazing tech, amazing developer community. All right. And my last pick over here would be Storage. This is one of the OGs in the space, but I do think when a sector starts to pop off, the OGs will run. All right. So those are my four picks: Filecoin, Arweave, Walrus, and Storage. All right. Cool. Um, I want to hear from you guys. And do you guys hold any sort of, storage protocols? Do you have anything in your portfolio, or did you have any in your portfolio? Let's hear it. Put it in the Q&A, or if you even if you're thinking of it. 10K USDT worth. Okay. Uh, I'm keeping Walrus, all right. Okay. So the fourth coin, Vikash, is Storj. It's spelled STORJ. Okay. All right. Cool. Looking at Arweave. Nice. Yeah, Arweave. I'm super bullish on Arweave and very, very undervalued still, I think. Okay. Cool. So I do see some folks holding Storage. Awesome, guys. Awesome. Okay. So yes, folks, I think that wraps up the session for today. Uh, Before I go any further, I just have a few announcements to make, and then we can head over to your questions. Uh, to start off with, I want you all to know that we're throwing a very, very exciting event on Mudrex, which has actually started today. I'll give you a quick brief, but I'll also share the blog, which has all the details. Um, so here's what's happening from today to the 31st. There's a whole new way for you to get rewarded just for trading like you normally would. All right. There's no complicated steps. Absolutely, there's no forms to fill. You just trade and that's it. You're in. All right. Okay, so this is how it works. All right. If you do more than $10,000 in futures volume on any given day, you will be credited with 1 USDT. Simple daily rewards for just being active. But it doesn't just stop there. There are also milestone rewards based on your total trading volume over the course of the event. So, okay, so for example, say you hit 200K in volume, you will get $25. You cross 500K in volume, that's another $50. 1 million, you will get $75. And if you go out all out and you hit 2 million, you will get $100, right? And of course, if you cross multiple milestones in one shot, you will stack those rewards. So let's say you hit 1 million, you're not just getting 75, you get the full 25 plus 50 plus 75. So you'll get 150, right? Now, for those of you who thrive on a little bit of competition, there's also a leaderboard. Basically, top 10 traders by total volume during the event window will win some, I would say, some pretty wild prices. I'm talking about like the first would be like a Kawasaki Ninja 650, a MacBook Pro M4, the latest iPhone or Galaxy Ultra, an iPad, PS5, you get the idea, right? So to get involved, all you have to do is trade. Honestly, it's just about trading. Your volume is automatically tracked starting today. You can follow your rank, your rewards, and progress in app using the tab. Super smooth. And yes, if you start trading midway through the event, you will still be eligible. Okay. Just make sure to rack up enough volume before July 31st. Right? Cool. Okay, secondly, if you're new to Mudrex and you haven't yet made your first deposit, we've got a welcome bonus for you all. Basically, when you deposit 5,000 rupees or more into your Mudrex account, we'll instantly credit you with 500 rupees worth of Bitcoin. It's pretty straightforward, no complicated terms or condition. Simply just enter the promo code that you see on the screen here, Anush500, during your first investment, and you'll see your bonus Bitcoin credited directly into your wallet. Right? Um, yeah, just consider this as a way of saying thanks and investing your time in learning. And I don't think there's any better way to get some free Bitcoin as well, especially during this time in the market. All right. Cool, guys. So I think that covers my announcements for today. Uh, let's move on to the Q&A. Feel free to drop any questions you have into the Q&A box. It can be about coins, can be about trading strategies, or just how to use Mudrex. And I will do my best to answer as many as I can. Right? Cool, folks. Let's go ahead and answer some questions now. Okay, I see. Okay. Uh, okay, I can see Shrish's question. I'll take this one by one. Do you suggest coins like Lido and Kronos coins? As for Lido, huge value is locked and Crow has been included in some ETF basket. Yes, great. Lido is a very good hold because it's playing off the entire Ethereum narrative. If Ethereum is going to continue going up, all of its ecosystem tokens are likely to do double that. And Lido is a brilliant protocol in Ethereum. But I will also say, other than Lido, Aave is a very good hold right now. So if you're considering, diversifying within Ethereum, Lido, Aave, brilliant holds. Um, CRO, yes, it's part of Trump's ETF basket, but just remember that CRO is heavily reliant on the crypto.com, so another crypto exchange, and how they are generating revenue as well. So it cannot be guaranteed that the ETFs alone will drive its value. So for that reason alone, I'm not currently very like bullish on CRO. But for LDO, yes, for sure. For sure. The next question I see is what's your take on Grass coin? Yeah, Grass is a great project. I think Grass is in built on Solana and it's an AI project. They have a very good backing and huge community as well. Plus, since it's built on Solana, that narrative as well is huge. So, like I mentioned for ETH, um, Sol runs all of these tokens will blow up. And Grass being positioned within the AI sector as well, great. That is another hold as well, for sure. Uh, uh, should I buy this coin right now? Yeah, let me just have a. So I actually held some Grass back in the day, but oh yes, absolutely. Absolutely would hold Grass right now. It's at 1.16 and it hasn't even started its rally yet. And like I mentioned, in crypto, money flows like this, right? Bitcoin, Ethereum, large caps like BNB, Sol, all of the others, Avalanche, and then into tokens like Lido and Grass. All right. So we haven't even seen that yet. We haven't seen that third rotation yet. So hold. And usually those are even more violent than the ones that we're seeing right now. Okay. Buy the coin, put a little bit of exposure, don't ape into Grass. But yeah, if you want to diversify your portfolio, put like 1-2% into this coin. Um, should I buy Ether? Okay, so ATH, I think this is another deepen narrative coin. Um, See, the thing is, Deepin has a very good use case like the storage narrative. Um, but I haven't seen any sort of traction in terms of developer activity for Ether has, or just that general Deepin niche of crypto yet. But that being said, rather than Ether and Helium, I would say Akash Network, AKT, for sure. They have a big community there. Okay, I want to keep only three coins out of the Sol and Sui ecosystem coins: Radium, Jupiter, Jito, Deepbook, Bluefin, Cetus. Which coins should I keep for this bull run? Okay, that's great. That's a great question. So I'm a huge Solana bull, but Sui's ecosystem you cannot ignore. So um, Deepbook, I would definitely say huge, liquidity provider for Sui. So Deepak is a very good hold. Uh, then the next I would say is Jupiter, uh, biggest aggregator on Solana. That's the only reason why I would pick it over Radium. I think they have more pairs there, and also goes in line with the tokenized stocks narrative that I was talking about a few weeks ago. And Jito, I would hold JTO simply because they are a very good DeFi play on Solana. So two Solana, and I would hold one Sui ecosystem. Yep. Cool. So I hope, Shrish, that answers all of your questions. Um, Viral, yes, you will get the recording. Usually this goes on our YouTube. Uh, if you just type in Mudrex, you'll be able to see our past recordings plus this one. This will go live tomorrow as well. Uh, okay. Okay. Price prediction for Solana between September and October. Okay, so right now Solana is trading at around $176. Wow. Okay. So that has really flown off. Um, I would say, and a pretty bullish case as well. Okay. My conservative case is that I think Solana by September can reach around $250. By October, around $270. And that's the new all-time highs. My bullish case is if we see new spot ETFs for Solana, if we see a rate cut happen in September, then I think $300 by September for Solana. Yeah. Okay. Uh, Aave, okay, people are holding Aave. Great. Hmm. Is Picoin good for holding? I would not say so. Um, Picoin, I've heard a lot of ambiguity. I don't see the team behind the project really backing it as much as I would like. And yeah, right now, I think in terms of risk to reward, it's a lot better utility coins to hold right now. Mm, okay. My thoughts on Wormhole. Okay, Wormhole has a huge narrative behind it, but again, there isn't traction around this narrative yet. It depends again on how much Wormhole you're allocating to your portfolio. Depending on that, I would say if it's a buy to add to your portfolio or just continue holding. All of these coins, I do think they're a good hold, uh, but do not overexpose or don't like over allocate to your portfolio. Uh, Cardano and Tengu. Okay, so I'm a holder of Cardano. HIDA has done some incredible gains over the past 24 hours. Uh, I do think it can go a lot higher. Um, Cardano has a great team backing it, amazing infrastructure, uh, massive community. All of these are green flags in my eyes. And I would just say just hold Cardano. Uh, I wouldn't say enter now because it is pretty overheated, but look for days when there is red and strategically allocate. But if you guys are holding, continue holding these strong utility based coins because I do think they are about to fly higher. All right. Ripple, yes, Ripple's a great hold. Continue holding it. They have amazing regulatory clarity now compared to the last bull run. So I think Ripple is very close to its all-time highs right now, if I'm not wrong. Let me just check. Yeah. Wow, look at that. 3.25. So very close. Very close to price discovery. Uh, Price discovery basically means there is no resistance, so nobody really knows where price is going to go. And it's coming at a time where there's so much momentum. So yeah, Vikash, continue holding your Ripple. Uh, Pengu. Okay, Pengu. Great. I mean, Pengu is a meme that has flown off recently. Uh, Meme coins will continue to rally. Yeah, I think last week you mentioned that memes are very, very risky. Only hold very small amounts of meme coins in your portfolio. Uh, and it's not necessary to hold these memes, but if you are looking to hold some, Pengu would, yeah, I would have Pengu in that portfolio. And also some Solana based memes like Bonk and Whiff, I would definitely hold. Yeah. Yeah, cool. AVAX. Uh, okay, so AVAX actually have a very, very they have a broad sort of uh utility, right? It's a layer one, but they have, utility for DeFi, they have utility for gaming, and I think gaming is where they're really, really looking at. So I'm keeping a very, very close eye on Web3 gaming because, and I think I will bring this as a sector spotlight in the next upcoming, uh, live stream. Um, Maybe not next week, but maybe the week after. And I do think if Web3 gaming starts going right, I think Avalanche can see some insane gains. Okay. Avalanche, I think Neo Protocol also they're doing something with gaming now. So just yeah, don't quote me on that, but Avalanche for sure, I know that they are massively into Web3 gaming. So yeah, just keep an eye out for this. Yeah, go to CoinMarketCap, see how your favorite Web3 gaming projects are performing, and then check back in with Avalanche, right? Hmm. Any small cap coin on Ripple network? Tanuj, I'm not too aware of small cap coins on Ripple. Um, Becoming 100x. Yeah. Uh, okay, guys. Manish, I'm trying to find your question. Okay, yeah. I'm a beginner in cryptocurrencies. Which coin can I invest? Okay, so Manish, let me break this down for you, right? Um, See, right now in crypto, you're seeing these high prices, right? You're seeing these huge digits, green days like this. Uh, and to be honest, currently you have to look at your risk plus your reward. All right. I cannot say that we are in the start of the crypto bull run right now. That would be wrong of me, right? We are somewhere in the middle range of the crypto bull run. Okay. Uh, Now, from a reward perspective, if you're willing to take on more risk, I would say look at cryptocurrencies between the 20 to 50 range. When I say 20 to 50 range, the top 20 to top 50 range. Again, this is keeping in mind risk to reward. I don't want to give you very, very small cap coins because they have the chance of going down very fast also. Okay. But 20 to 50, usually that's a good range. All right. But if you're playing it a little safer, you cannot go wrong with the blue chips. And this is what I would definitely suggest. If you're a beginner, invest in our coin set. Okay. A coin set is basically, you can think of it like a mutual fund for crypto. There's a basket of different cryptocurrencies in one investment. So you click invest and you have all of these in your portfolio, right? Um, so for you, since you're just starting with crypto investing, I would say start small and start with a blue chip coin set. Okay, so you will get exposure to Bitcoin, Ethereum, Solana, all of the major coins. And in terms of risk to reward, that will be your easiest and I would say the most safest play. All right. You will see some gains in those coins. Okay. I hope that answers your question, Manish. Okay, how about trading futures? Yeah, so Gaurav, and everybody here, in fact, uh, tonight at 8 p.m., we have a live futures trading event happening on our Telegram community. Okay. Uh, please come and join us there because we will actually be talking about the storage coins and actually taking a live trade. All right. Futures right now is a massive opportunity. All right. If you know how to do your risk management properly, you can make some really good profits in futures. All right. And please join us for that. I hope you all have access to our Telegram community. If not, just request for the link and I will definitely send it across. Manish, the coin name is uh, CoinSet. Okay, so I'm going to actually, I'll answer it for you. I'll type it here. I'm sending it to you. Uh, yeah. So this is the coin set. I've sent that to you. Go ahead and just check that out. All right. Okay, Gaurav, I'm sending you the Telegram link. You just pull it up. All right. Cool. I've sent it to you, Gaurav. Okay, guys. Anybody else who has access to or who wants access to our Telegram community, please do join in. I can send you the link right now. Remember, it's happening at 8 p.m. All right. Yes, Tanuj, that's spelled correctly. Vinay, I'm sending you the link. All right, I'm sending everybody the link here. Okay, folks. Yeah, I guess if there's any more questions, guys, I have about 5 minutes or so. Which coins is long-term holding and give good staking rewards? Um, okay, I would say long-term holding, it would be Solana. I'm not too sure about the staking rewards on Trezor. I know Phantom, like the hot wallet, has good rewards, good yield on holding Solana. I would say that. Uh, okay, folks. I guess I'll end today's stream then. I'm not able to see more questions, so I'll wrap it up for today. Just remember, guys, that we will be having this stream every week. Okay. Next Thursday, I'll be here again and we will go through the markets. I just want you all to pay attention. The next few days, tonight and tomorrow is going to be very, very crucial. I do expect a lot of volatility as soon as the US markets open today. So just keep an eye for that. And do join us for our live stream that's happening at 8 p.m. and get involved with the future bonanza that's happening on Mudrex. All right. There's no better time to accumulate some stable coins so that you can then use that for trades. All right. So please do come along and join us. All right. Cool. With that said, guys, thank you so much for sticking along for the last 1.5 hours. It means a lot. And I will see you all again next week. See you, folks. Happy trading and bye bye.